Hello students, welcome back. This is Accounting 1303, Introduction to Accounting 1, and my name is Mrs. Mercado. Okay, this week we are going to be covering Chapter 10, which deals with accounting for sales and cash receipts. Now this is Lecture B. Let me put that up here. Okay, this is Lecture B because I had already posted another lecture prior to this that went over some of the key points from the chapter and it covered one problem. Now in this lecture I'm going to cover two additional problems that way you can have for guidance as you're completing your homework. Okay, so I'm not going to go over any of the chapter content per se. I'm just going to go straight to problem solving. Okay, that way you know how to solve these two problems. Okay, the first problem that I'm going to be covering today is exercise 10-8. I'm sorry. This particular problem deals with journalizing cash receipts. So cash receipts means, we're the business and we are receiving money from customers. Okay, so we need to record these items or these entries in our books because, we are getting paid for certain things and we need to record those items in our books. That way we can have up-to-date information. Okay, so it says enter the following transactions in a general journal. So I've already set up the journal here for you and we have several transactions that we have to post. Okay, so the first transaction we have is dated July the 6th. Okay, and it says James Adler made payment on account 643. Now, before I start journalizing these transactions, we need to understand what is going on here. I like to talk to myself and ask myself, well, what's happening here? Well, it says here that James made a payment of 643. So who is James making the payment to? Well, James is making the payment to us. We are the company, okay? So we have to assume the role that we're the business, and James owes us money. So James is making a payment to the company of 643. So now we, the company, have to record that payment in our books. Okay? So James made a payment of 643. What did the company or the business receive from James? Well, the business received cash because James made a payment to us. When you pay someone, you usually pay with cash, right? So we, the business, received cash. We received $643 in cash. Now, by now, you should all be very familiar with the normal balances of your accounts. Cash is an asset account and the normal balance of cash is a debit. So whenever you debit cash, your cash increases. Okay? Now, James Adler made a payment. So what this means is at one point in time, James owed us money. Okay, so we set up a receivable from James saying, okay, James needs to pay us in the future $643. Okay? Now let me make a little note here on the side. Okay, so whenever we set up an accounts receivable, this is people or businesses or individuals that owe us, the company. Let me put this on the next line. The company money. Okay, so when we initially set up the accounts receivable, when the accounts receivable is set up, we debit it. Okay, so if James owes me money and I need to set up in my books, I'm going to debit my accounts receivable. That way I show that James owes me money. Okay, when a payment is made, okay, then we credit the accounts receivable account. Okay, so when the accounts receivable is initially set up, the customer purchased from us on account and they're going to pay us at a later point in time, we debit accounts receivable. Okay, when a payment is made a couple of days later or weeks later, a payment to my accounts receivable is made, then we credit your accounts receivable. Okay, so by debiting, that increases your balance of the accounts receivable. By crediting, it decreases the balance. Okay, that's how my accounts receivable work. So what is happening here? Are we setting up an accounts receivable? No, it says here that they're making a payment. So if they're making a payment towards their accounts receivable, then we need to credit the account. What this means is that James owes me less money, or he completely paid off his balance. Okay? So I have here accounts receivable. Now we need to keep track of whose accounts receivable this is. Okay? So we need to put the name of the customer. Okay? In this case is James Adler. Okay? So I'm going to go ahead and I'm going to credit it 643. Okay? And I'm going to put here a description. We received cash on account. So what we ended up doing was we recorded the cash that we received by debiting it, and we decreased James Adler's receivable by crediting it. Okay? That happened on the 6th. Now on July the 10th, there was cash sales for the week, $2,320. What does this mean? This means you have some kind of a business. A customer walks in the door and they buy something from you and they pay cash. You're not going to be making a deposit after every customer walks in the door. What you do is you aggregate all of this cash that you received, and at the end of the day or at the end of the week, however your business works, you get all of your money that you have on your safe and you take it to the bank. Okay? So, in this case, during the week, you sold cash sales of $2,320. Okay, so now you're taking this money, this $2,320, to the bank. Okay, so what's happening? Well, your cash is increasing. Okay, your cash in the bank is increasing by $2,320. You have got money because you just deposited in the bank. Now, what you need to do is you need to record those sales. You hadn't recorded them before. Now that you actually made the deposit, you can record those sales in your books, and you had sales of $2,320. Now remember, sales is a revenue account. Okay? Okay? And when you record sales, you credit the account. Okay? So a credit increases your sales. Okay? So the normal balance of your sales, which is a revenue account, is usually a credit. Every time you have sales, you're going to be crediting your account. Okay, most of the time, unless there's some kind of error that you're trying to correct. But 99% of the time, your entries to sales will be a credit. Okay, so now these are going to be your cash sales, to record cash sales for the week. Okay. So every time that you're recording cash sales, you're going to debit cash and you're going to credit sales. Okay? And these are going to be repetitive entries. Once you've got these two entries down, you've got it made, because they just repeat over and over. Okay? Let's see what's happening on July the 14th here. On July the 14th, Betty Havel made a payment on account. Okay? $430. So Betty owed you money, and Betty is making a payment to you for $430. Okay, so because Betty is making a payment to accounts receivable, you're going to credit your accounts receivable. So what are you receiving from Betty? You are receiving cash. Okay, cash increases up to $430. Okay, now I'm going to credit my accounts receivable, and we're going to notate this payment was received from Betty Havel for $430. Okay. And we received cash on account. Okay, so if you notice, it's the same exact entry as the one dated on July the 6th. The only thing that changes is when you put your accounts receivable, you have to reference the name. And the reason we reference the names is because we have accounts receivable subsidiary ledgers. What those are, they're ledgers specifically for each customer. That way we know how much we have on our accounts receivable for that customer and any payments that have been received for each customer, and we can figure out the ending balance for each customer. Okay, so on July the 15th, it says J.L. Borg made a payment on account of $117. So once again, we received cash. In this case, we received cash of $117, and we're going to go ahead and we're going to credit our accounts receivable, And the name of the customer is J.L. Borg. Okay, there we go. And then here we put record or receive cash on account. Okay. The last transaction we have is dated July the 17th, and it says here cash sales for the week. So another week has passed by and you went to go make a deposit at the bank. Okay, your cash is going to increase because that money has been deposited of $22.37. Okay, and you're going to record the sales that you had during the week in your books for $22.37. So you're going to have record cash sales for the week. Okay. So those are the entries that happen. If you notice, there's just two different entries that we have. We have one whenever a customer is making a payment on account, you always debit cash and you credit accounts receivable. If you're recording cash sales, then you're going to debit cash and you're going to credit sales. Okay. Remember, on your accounts receivable, always reference the name of the customer. Okay. So pretty straightforward, not very difficult. Okay. Now, the last problem that I'm going to be going over, okay, this is the second problem that I'm going to be covering in this lecture. This deals with a schedule of accounts receivable, okay? So it says, from the accounts receivable ledger shown, prepare a schedule of accounts receivable for Fang Company as of August the 31st. Now, I was mentioning that we have to keep track of our receivables for each customer. This is what our accounts receivable ledgers look like. It has the name of the customer on top, their business address. Sometimes you have their phone number, or you have a account number for each customer. It just depends on the business. Where I used to work at, we had a customer name, we had a customer number that we designated to that customer. We had their phone number because we always want to have their contact information, okay? But the layout is the least of my worries. The important thing is down here. Okay, what happens here is we keep track of all of the information for B&G distributors. Okay, so the first entry we have here is a debit. Whenever you see a debit, that means that that is the point in time where this customer purchased something from you on account. This is when we decided to give them credit and they owe us money. So for example, B&G distributors purchased something on account for us for $1,380. Okay, so that meant that as of August the 3rd, B&G distributors owed me $1,380. That was my balance. Then a couple of days later, they came back on the 8th and they made a payment of $140. So now B&G distributors owes me $1,240. As B&G distributors either buys on account by debiting or makes payments by crediting, this little ledger is going to keep track of the balance for this customer. And we keep the balance for each customer separate. For example, M. Chang. Okay, M. Chang bought an account, $2,136. Remember, when it's a debit, that means that's when we initially set up the receivable on our books. Then a couple of days later, on August the 11th, they paid the entire balance off. So as of today, Mr. Chang here owes me nothing. Okay? The balance has been completely paid off. Okay? So what the accounts receivable ledger does, it keeps track of the balance, how much money is owed by each of the customers. Okay? So now they're giving us the ledgers. They've done all of the work for us. Now they're asking us to create a schedule of accounts receivable. Okay? When we provide reports to management, we don't want to give them all of these ledgers. Many times managers don't know how to read this information, or it's just too much information. So we, the accountants, can't expect for management or for board members or for whoever's reading these reports to understand what a ledger is, how to read them. Okay, so we prepare schedules. Okay, schedules are there to simplify information. So this is coming straight from your ebook. A schedule of accounts receivable is basically an alphabetical or numerical listing of customer accounts and balances, and it's usually prepared at the end of the month. Now, it's either alphabetically ordered or numerically organized. Okay. In this case, we are not provided with an account number. Okay. If the customers were being recorded or labeled by account number, maybe B&G Distributors is number 1, Mr. Chang is number 2, this company here, Hinchcliffe, is number 3. Then when you're organizing them here, you would organize them by account number. In this case, we don't have an account number provided, so now we're going to have to organize it alphabetically, okay, by alphabetical order. Okay, so it's just basically listing all of the customer balances in alphabetical order and their ending balances. So this report is going to show us how much in total do people owe us and who owes us what. Okay, so we're going to go through the list and we're going to have to figure out which one goes first and which one goes next. So this one starts with a B. This one starts with well, this one we really don't care because it has a balance, but it's M. Chang. And then we have another B here, but this is BJ and this is BG. And then we have Sally Pitts. And then we have Trendsetters. Okay, so we have 2 accounts that start with a B. Okay, so now we have to say, well, which one are we going to put first? Well, let's do our alphabet. It's A, B, C, D, E, F, G. Okay, so G goes first. So it's A, B, C, D, E, F, G, and then H, I, J. So then the J will go second. Okay, so you can practice your alphabet song here. Okay, so we've already figured out that the G goes before the J, and that's how we're going to label it. Okay, so I'm going to start off with my G. Okay, and we're always going to pick up the ending balance. Okay, the ending balance right there. Okay, let me just put some right there. So my ending balance is 1,240. Okay. The next one we have is BJ Hinchcliffe. I don't know what kind of a name this is, but and company. Okay. And the balance for Hinchcliffe is 1490. Okay. Remember, we're picking up the ending balance. Now, after the B, the one that should have followed is M. Chang. Okay. M. Chang has an accounts receivable ledger, but it does not have a balance. Because it does not have a balance, I am not going to include it. I'm going to exclude it. Okay, so if a customer has an accounts receivable ledger, but they've already liquidated their balance with us, we don't care to include them because they don't owe us any money at that point. So I am not going to include Chang on my list because Chang doesn't owe me any money right now. Okay, now we go to the next one. Okay, so what goes first, the S or the T? This is where you do your alphabet song in case you don't know your alphabets. But S goes before T. So I'm going to go ahead and I'm going to put Sally Pitts. Okay. Just remember it's alphabetical order. Sally goes first and her balance is 838. So Sally hasn't given us any payment. She owes me $838. And the last one we have is Trendsetters. Okay. And Trendsetters owes me, let me see, 1,018. Okay, so it's 1,018. Sorry, 1018. Okay, so those are my 4 accounts that I have. I have 1, 2, 3, 4, 5 accounts in total, but one of those customers doesn't have a balance, so I did not include them. Okay, now I'm going to get my total. Okay, so you just add your totals together. Okay, and that is my total of 4586. Now, when you give this report to your manager, That way they know, okay, Mr. Manager, here is your schedule of accounts receivable. Okay, so what this means is these are all of the people that owe us money. Okay, Mr. Manager. Okay, BNG distributors, Hincliffe, Pitts, and Trendsetters. The total that they owe us is $45.86 combined. Okay, and that way your manager can look at these reports every month. Okay, why hasn't Trendsetters paid us? I've seen that they've been on our receivable, on our schedule of accounts receivable for 3 months with the same balance. Not a single payment has been made. Okay, and they can follow up. So this is just basically a summary of all of the receivables that you have in your books. Okay, now this amount right there should equal to your accounts receivable ledger balance. Okay, your accounts receivable ledger is made up of all of these subsidiary ledgers. Okay, so let's say your balance is $4,586. Then you look at your subsidiary ledgers. Okay, well, who owes us that money? Well, BNG distributors, Clincliff, and all of these customers. And then you can look at the detail here. Okay, so the accounts receivable subsidiary ledgers keep track of the itemized transactions. This report, the schedule of accounts receivable, gives you an overall summary just with the ending balances of each customer. Okay, so these are the two problems that I'm going to be going over in addition to the prior problem that I had already covered. I'm not going to go through all of them. Remember to go into Cengage. Some of these problems have the short videos embedded in them that can help you. Or the actual chapter, the ebook, has great examples and great information that can help you solve your problems. But we do need to build our critical thinking skills, not just me show you how to work them out. You need to be able to read the information, read the content, and then from the information that you've read, analyze the transactions and be able to come up with a solution. If as you're working your homework assignments, you do get stuck, you have issues, you're having problems, don't hesitate to reach out to me. Just ensure that you do include the problem number. And I do want to see your attempted solution. I want to see that you've tried, and I want to see what you're doing so I can be able to provide guidance. Okay? So that is basically it for this short lecture over chapter 10. Please remember that before you attempt any of your assignments, you should read the chapter in its entirety so you can be able to understand what is going on. Okay, that is it. Stay safe, and until next time, bye-bye.